Welcome to Fleet News Group podcast, where we talk a lot about shifts towards more sustainable transport. I'm Caroline Falls, and today I have the pleasure to speak with Richard Lovell, an Executive Director at the Clean Energy Finance Corporation, a sort of government-owned green bank set up about a decade ago to help finance clean technology and decarbonisation projects in Australia, including for fleets. Welcome, Richard.
Thanks very much, Caroline. It's a pleasure to be here.
Firstly, please just tell us a little bit more about the history and the role of the CEFC, and I guess some of the key projects you're presently involved with.
Absolutely. The CEFC was created, it's around a little over 10 years ago now, and started investing in 2013. The purpose of the CEFC, as per the legislation which created the organisation, which is federal legislation, is that we are tasked with trying to facilitate the flow of funds into the clean energy sector. And that sector, as defined in the legislation, includes renewable energy, energy efficiency and low emissions technologies. And that includes a lot of the activities that you would expect to see happening in that transport sector. So we've invested broadly across the Australian economy. And as you would expect, we've done a lot of work in renewables, but equally we've done a lot of work in energy efficiency across a whole range of sectors. So for example, resources, transport, as I've mentioned, agriculture and property are some of the examples of the sectors that we've invested in. We've invested across a range of financial products, so a mix of debt and equity. And we're generally investing, as I said, to try and catalyse the flow of funds from the private sector in alongside us. We can do that either in the transaction itself directly, or we can invest so as to try and create a pathway for others to follow as we prove up technologies and business models.
Okay, so obviously, as you've said, you're involved in a lot more though than helping decarbonise transport. But I guess everything you are involved with, like renewable energy, energy efficiency, low emissions tech, they're all embedded in fleets. And I heard you a talk you gave recently at the Institute of Public Works Engineering Australasia's Fleet Conference. And there your theme was electrifying fleets, and that's where, of course, I'd like us to concentrate too. And the opportunities have improved vastly in the last year, haven't they? Can you tell us what opportunities you see for EV uptake currently?
Yeah, so there's a few recent developments, I would say, that have been very conducive to transport. The transport sector on its pathway for decarbonisation. The first and most obvious is that at the passenger and light commercial end of that spectrum, we are seeing increased vehicle availability through a number of manufacturers bringing greater numbers of electric vehicles to Australia. The number of types of models, as well as the number of actual cars, has been increasing, and that's really important because for fleets in particular, it's critical that vehicles are suitable. So as great as that has been to see uptake of vehicles like Tesla, they're not necessarily the sort of classic vehicle that we would expect to see in fleets more generally. And so a diversity of vehicle types is really important. That's an ongoing journey, but we expect to see that accelerate as a lot of manufacturers start to step up their ambitions to transition their own manufacturing in line with the targets that have been set. At the same time, we've seen, increasing signs of availability of heavier vehicles as well that are lower or zero emissions. That's been mainly focused at the lighter end of the spectrum rather than at the heavy end, which remains a really challenging task. Similarly, we've seen a lot of different initiatives undertaken with respect to charging infrastructure. Charging infrastructure is quite a challenge because it is difficult to undertake classic investment that sees charging infrastructure as an as a typical infrastructure asset, which repays steady cash flows over the life of its use in order to repay the capital cost and generate a profit. That's really hard with charging infrastructure for a whole bunch of reasons. But we have seen a lot of players like state governments, like motoring organisations, and a number of other private sector players recognise the opportunity that charging infrastructure can bring. And so we expect to see even greater focus on that in the course of the next 12 to 24 months. So there have been a lot of opportunities in that sort of area that we see from a financing perspective, and what those hopefully translate to is greater capacity for fleets of a range of sizes, but certainly starting with passenger and light commercial, for fleets of that type to start to accelerate their transition of their fleet to hopefully as close to zero emissions as possible.
Okay, so you also sort of mentioned some of the barriers to EV uptake there, really, when you started talking about charging infrastructure. But another barrier that you mentioned at the WEA conference, and you had some interesting things to say about residual values of EVs, particularly the unequal comparison with traditional internal combustion vehicles. Do you want to explain that here for our audience? I think you were talking about really a lack of data leading to low residual valuations of EVs.
Absolutely. So we've seen historically over a long period of time, residual values of vehicles within fleets has been one of the key factors that drive the total cost of ownership. And whilst vehicle prices always have a level of volatility, and predicting residual values always has a level of risk, you can start to get, a line of sight around historical performance the more data that you have. So every time a vehicle sells, it's another data point which allows you to make hopefully a better prediction as to what a similar vehicle will be worth in, let's say, 3 or 5 years' time. The challenge with electric vehicles is that because so few of them have made it onto the road so far, an even smaller number of them have ever actually been sold in the second-hand market. And so therefore there's a lot more uncertainty simply because there are far fewer data points. And this was the case we saw with hybrids when those vehicles were first being introduced. There was volatility because of uncertainty. The difficulty that creates is that both for fleet operators who are seeking to try and run a vehicle with an efficient total cost of ownership, but also for the financiers who provide operating leases and similar products to those fleet users, that uncertainty in residual value creates an additional cost which has to be paid for through the useful life of the vehicle. So if you don't know whether an electric vehicle is going to be worth 10% of its original value or 50% of its original value at the end of the lease, you have to cover that uncertainty through the lease payments. And that just means that operating an electric vehicle is more costly than it would be the case for an ICE vehicle. And again, none of this is terribly sort of profound observations, but clearly over time, you can only solve that problem through observed data experience through selling electric vehicles. And that will come, but it's still a barrier at the moment. We expect to see... Sorry, go on.
Oh, just another comment there is the data that you would have a lot of in recent years has been skewed by like the COVID effect of, pushing residual values up. So just another skew in the data.
Yeah, that's right. I mean, vehicle values have been massively elevated through the majority of the COVID period, although they took a bit of a hit early on, simply because obviously fleets found it very difficult to get vehicles. That's been true of electric vehicles as well. We've seen much slower uptake than we would have liked, simply because supply chains were materially disrupted. But those sorts of disruptions, I think you can accept as being part of the risk. I mean, you can't really sort of build your model of your world around the fact that there'll never be another pandemic again, I think. But it's more the inherent uncertainty associated with EV as a technology type, which becomes challenging for businesses to just take on. And so that is a barrier, which I think only time can fully cure. But hopefully the early signs of strong battery performance, because fundamentally the battery is critical to the value of the vehicle, hopefully early signs of strong battery performance through the life cycles of vehicles will be supportive of people having a little more confidence, but it is a challenge.
I was just wondering, do you offer the CEFC, do they offer any grants or access to special finance that business fleets can access to escalate their transition?
We have done a reasonable amount of work with a number of fleets, both fleet users and FMOs. We're fundamentally a commercial investor, and we don't provide grant funding. There are separate government agencies that look at grant funding, and there is grant funding being made available by state governments. So, for instance, the New South Wales government has a grant scheme for fleet users, which is run on a reverse auction basis. We have sought to invest so as to encourage uptake of electric vehicles by fleets. In some instances, we've taken a limited level of residual value risk ourselves to try and overcome that particular barrier. And we've spoken with a number of different providers about whether our financing can be used in a way so as to make the challenges with the charging infrastructure for the fleet users less burdensome. So there's a number of things that we've looked at doing, and we continue to spend a lot of time talking to fleets, FMOs and corporates about how we can invest so as to support that uptake. The grant funding, as I said, is largely a part of the state government policy settings at the moment.
I've been to a couple of conferences recently, and I'm always talking to people in the fleet industry, and anyone on the supply side of the electric vehicle equation, particularly fleet leasing, novated leasing providers, are saying the inquiry level for EVs has absolutely skyrocketed since the fringe benefit tax discount was announced in Australia last year. Has that impacted your organisation at all? And can you tell us what you're seeing?
Yeah, we're seeing similar feedback from the market. So, the fringe benefits tax exemption for EVs under the luxury car tax threshold. It's interesting. It's a policy there was a similar policy introduced in the United Kingdom, which had a similar supportive effect. It depends on who you talk to as to what the level of EV uptake through novated leases was prior to that policy. But because EVs are, theoretically for the same type of vehicle, an electric vehicle will be more expensive. Historically, novated leases were something we just actually didn't do, not because we would have ruled it out, but because the fringe benefits tax effectively multiplied that price disadvantage. Since the implementation of that policy, obviously now the reverse is true. In fact, you'd have to, broadly speaking, you'd have to pretty much want to buy an ICE vehicle pretty badly to prefer it over an EV if you felt that you were going to be up for paying the fringe benefits tax, assuming you could get the vehicle. So we have also seen that uptake. We are considering whether or not that support of novated leases through the fringe benefits tax exemption is something that we need to be involved in. It's a fairly significant level of support, and so we need to just establish whether or not it makes sense for us to further support that particular mechanism. So there's some work there for us to do, but we are seeing very strong level of inquiries. I think that the issues remain around vehicle availability and charging infrastructure and so forth, but we see it as having a pretty significant effect on inquiry levels as well.
Another thing I've been hearing a lot of people say is that they can finance the cost of transitioning to EVs by right-sizing their fleet, which really it's just another way of saying cutting the number of vehicles in their fleet. I just wondered if that was something that you could talk about, the value of right-sizing.
Yeah, I think we don't have a particular view as to the approach that fleet users should take as to the sizing of their fleet, because ultimately it has to serve their business needs that are unrelated to that are superficially unrelated to the emissions profile. I think right-sizing fleets is an important topic to think about, partly because broadly speaking, 50% of the emissions that come from a vehicle result from the vehicle in use. I'm talking about a conventional ICE vehicle here. The other 50% come from the emissions that are created in the manufacturing of the vehicle, and that's because refining, ore to make steel and aluminium and all of the other components of the car have a lot of embedded carbon in their manufacturing process. And therefore, if a car is not being used efficiently, then it's arguably the case that those embodied emissions in the vehicle themselves are, functionally wasted. And so, I think what we would see as being a natural path is that the transition to a different type of fuel and to a different, in some instances, mode of operating those vehicles is probably a good time to think about the sizing of the fleet, because everything costs money, and so you've got to try and get value out of the fleet that you have. The fact that you save on the embodied emissions is another positive, and even zero tailpipe emission vehicles create a level of emissions through the charging. So we think it's logical and natural that that be done, but it's not, sort of the anti-investment, if you like, to defleet. Whereas we're an investment shop, but it's a logical thing, we think, to do to try and consider the right sizing of the fleet rather than have underutilized vehicles.
Yeah, no, that's a really good point that you make. I'm so glad I brought that up. Another thing I wanted to talk about was, and you've already mentioned, a little bit about the charging networks. So overseas studies seem to indicate that some 80 to 95% of passenger and light EVs will be charged at home. So I wonder, what will a fully formed public charging network look like? I suspect it's going to look nothing like the petrol diesel fueling network that we have now. Can you talk about what you see as the future of the charging network, and what is the CEFC doing in that space?
We would see similar sorts of indications from data about the proportion of charging done at home. As you say, that's really for passenger and I suppose like commercial vehicles as well. And so there is an overlay in the charging infrastructure with respect to heavier vehicles that needs to be taken into consideration. But leaving that to one side for a minute, broadly speaking, and this is quite broad, you can think of three levels of charging. There's the at-home charging. There's the relatively low speed charging that would be done at point of destination. Think sort of hospitals, car parks, train stations, shopping centres, those sorts of situations. And then there's high speed charging, which facilitates long range trips for electric vehicles, and that's the classic, kind of road stop, at Goulburn on your way down to Canberra from Sydney, where you stop off for a pie and charge your EV. So if you think of those three levels, it's interesting because if you go through them one by one, at-home charging, that's a relatively work-a-day kind of question. What do you ideally want is to have that charging infrastructure done in as smart a manner as possible, so that it supports an efficient grid, and it supports penetration of renewables, and it supports low cost transition of the grid. And we're doing quite a bit of work in that space. Think about that next level of charging. We would expect a lot of that to be done off the back of commercial drivers for the owners of those those destination point assets. So it's commercially sensible for shopping centre operators to have charging infrastructure, because their customers are going to be coming in, and if they can charge their car, then that's great. The high-speed charging network is really one of those things which will support people's range anxiety, but it doesn't result in a lot of the electrons transferring into the car they're going to be used to drive the things, because those long-range trips are relatively infrequent. But the network needs to be there, and so, in fact, we've seen already the state governments like Queensland, like South Australia, like New South Wales, undertake a lot of investment in that space, which needs to then subsequently built on. the commercial case for a lot of that high-speed charging infrastructure perhaps will become easier to support when there's a greater number of electric vehicles. But in the meantime, we need to have a start made. And so we're seeing state governments do things often in partnership with motoring organisations to get that started. And hopefully over time, that will become, you know, a more conventional infrastructure style asset. But it is going to take a little bit of time, we think.
I just also wanted to get your view, or talk a little bit more about your outlook for heavy vehicles and electrification. I went to the ATA trucking conference recently too, and it was quite sobering, with really very little talk and focus on electrification. The heavy vehicle industry is more concerned with things like heavy vehicle law reform, driver shortages, retention, health, fatigue management, road costs and permits. So the EV in transport story is very bumpy, isn't it?
Yeah, I think that's fair. Admittedly, it depends on who you talk to at what point in cycle. But all of those things are critical considerations for people that operate and that own heavy vehicle fleets. The fuel mix is clearly going to be an important part of the journey for fleet owners over the course of the next, pick the number of years, but let's call it 10 years, because the transition is going to have to take place. We would very much like to see greater availability of technologies that support heavy transport and logistics. Again, it's a bit of a mosaic of solutions. So, you work from the bottom up to some degree in terms of penetration of electric vehicles as far as size is concerned. There are some technologies which I think it would be challenging at the moment to imagine existing road freight being replaced with electric vehicles. So at the really heavy end, B doubles and so on and so on. Hard to see that pathway, and that's why people are much more focused on hydrogen as a technology for those types of assets. So, I think it is, as you say, bumpy, and there's a patchwork quilt of solutions that need to be brought in to address. But there's no doubt that there are significant incentives from the perspective of corporate and social responsibility imperatives for fleet operators, logistics companies, and their customers to focus on decarbonisation. All of the other issues you mentioned, obviously really important. Some of them are actually assisted by electric vehicles. Driver comfort and so forth is much better in electric vehicles. And there are other benefits that come from transitioning to an upgraded fleet as well. But it is definitely a challenging area. We spend a reasonable amount of time on it, and I think it is going to increasingly become a focus as the easier parts of the transport fleet in Australia progress through their transition.
Yeah, so finally, I just wonder if you can tell us a little bit more about some of the projects you're financing, and if any of them are in the heavy vehicle sector. And just another phrase that I picked up from your talk recently was some criteria that you're always on the lookout for example, a fast mover. What do you like about a fast mover?
Yeah. So maybe on the second part of that first, the fast mover point, is something that we've sought to work on through the course of, all of our investment activities across all sectors. And what I was getting at with that phrase was that we find it's often very productive to try and work with parties who are already themselves trying to be leaders in a particular space. The reason for that is that it probably supports the question of alignment, and because we're asking companies to stretch a little bit what they're doing, or if we were just financing things that were happening anyway, there wouldn't be much point. So we're always asking people to stretch what they're doing, and so it's much easier to achieve that outcome if you're working with an organisation that themselves is motivated to be a leader. That's not always the case. We try and do volume lending, in electric vehicles more broadly with people who just want to take up, a good new car and want to make a green choice. in the consumer space, for instance. But at the corporate end, we find that alignment is helpful in terms of trying to work through some of the difficulties that come from adoption of new technologies and challenging technologies and business models. With regard to the sort of things that we are doing in the heavy vehicle space, it has actually proven to be quite challenging. So we've continued to talk to a lot of the manufacturers, the natural manufacturers. We are seeing some level of improvement there, again, probably at the lighter end of the heavy vehicle space. We've seen some novel propositions with regard to technology such as battery switching, so for instance. It's a bit like if you think of your gas bottle at the local Bunnings or the local servo, you roll up, you swap one battery out, put another one in. The theory is quite elegant, but the business models are quite tricky, we have found to date. We expect to see, again, probably parties that are willing to lead will be first movers, but functionally speaking, you do need to have technology available that's plausible. We spend a lot of time in the infrastructure space, and those sorts of guys run a lot of heavy assets. So if you think airports, ports, those kind of assets. So we expect to see them take a lead in niches where they can make those sort of things happen. So for instance, some of our infrastructure assets include airports who've already transitioned bus fleets that are running routes around the airports, for instance. The state governments have tried pretty hard with regard to the bus fleets, and we expect to see that continue as well. So, and we have in fact funded a bus transaction in the New South Wales market with a party called Zenobi. So those are the sorts of things that we've done and that we're interested in doing, but there is a fair amount more work to do. And certainly if any of your listeners are thinking about their transition and are interested in the financing end and what that could do to support the transition of heavy vehicles, we'd be extremely keen to chat to anyone.
Thanks for your time today, Richard. It was fantastic to talk with you and learn more about the CEFC and its projects.
Great pleasure. Thanks very much, Caroline.
You've been listening to Fleet News Group podcast. It was edited and produced by Isabella Fiorentino. You can follow us on Spotify. Just search for Fleet News Group. We're also on Instagram, Facebook and YouTube. Our website is fleetnewsgroup.com, where you can get all of our stories, videos and podcasts. Until next time, drive safely and take care.